Hello and welcome to Market Domination. I'm Josh Lipton, live from our NYC headquarters. A record-setting day on Wall Street despite the government shutdown. We're looking at how this government shutdown will impact the economy. Right now, there's just an hour to go until the closing bell, and stocks, they are higher. Let's take a look at the popular averages here. The Dow is up about 110 points. The S&P 500, your broad gauge, is about 0.4%. Tech-heavy NASDAQ, it's about 0.5% here. Let's welcome in Washington correspondent Ben Werschkul. So I have data and markets editor Jared Blickery joining us to break down all the headlines. Jared, my friend, let's start with you on the trading action so far.
Josh, key word you just used, record setting, and that's what we're looking at. We're set for records in the Dow, in the NASDAQ, and the S&P 500. Here's the Dow up 117 points, only 0.25%, but good enough to register a record high as, if it persists into the close, as it hit a record close on the end of the quarter only yesterday on Monday. Here's the intraday price action. We are climbing towards that peak that we saw just before the noon hour earlier today. And here's the NASDAQ set for its best day in over a week, up about 0.5% or 115 points there. And the S&P 500, just a little bit less than that, down 0.4%, more than clawed back some of those early losses, which really weren't that much to begin with. Russell 2000 at highs of the day, it is up 0.25% too for that small cap index. And all of this notwithstanding, we got a shutdown on our hands. And I did a study that I was reviewing the other day, and stocks don't tend to move that much around these shutdowns, but bond yields tend to move up. Guess what? They're doing the opposite today. That means that investors are not buying those bonds, or they are buying those bonds, and we're seeing yields go down here, that 0.4% for the 10-year. 30-year, we are seeing a drop of about 2 basis points there, and that is bringing that yield to 4.71%. Also a small dip in the U.S. dollar index, but nothing much to write home about. Now, in sector action, this is interesting. We'll take a look at healthcare in a second because XLV is up 3%. Been a while since we've seen that kind of movement there. Utilities, that is a record high for utilities here. XLU up 1%. Consumer discretionary well, and tech. And guess what? That's a record high for tech as well. All of those outperforming the S&P 500 here. To the downside, we got communication services, which is leading to the downside, down about 1%, led by Meta. We'll take a look at that in a second. Also, materials off by about 1%. That was XLB. Now, here's the NASDAQ 100, and you see a lot of green, especially in the larger issues. There's Tesla up over 3%. There's Amazon up over 1%. And as I said, Meta kind of dragging down communication services, which it also shares with Alphabet there. Meta down about 2%. And by the way, NVIDIA hit another record high yesterday. So if it persists in the close, that'd be another record setter there. So lots of records to watch today. And we're seeing this also play out, some of this strength in the Dow. You got some of these larger cap names, but guess what? Financials, energy, a little bit in the red here, along with some of those consumer discretionary names that are not the mega caps. So like Walmart down 1%, Home Depot down 1%. By the way, Walmart is staples. Visa up about 2%. And I'm going to flip over to make sure that we get to our pharmaceutical screen. Check out this. Healthcare really surging today. Eli Lilly up almost 9%. AbbVie up 5%. AstraZeneca up 10%. So really impressive work here by the XLV pharmaceutical sector. Back to you, Josh.
All right. Thank you, Jared. And turning to Washington, where the government gears have grinded to a halt. Ben, can you unpack for us the fact that we are in day one of this, but also the Trump administration may be positioned here, Ben, for some more permanent decisions on spending?
Absolutely. Yeah, there's an old maxim here in Washington that you should never let a good crisis go to waste. And I think you're seeing kind of a version of that here in Washington today in some of the Trump administration's moves, especially in the economic policy realm. On the one side, there is some moves to wall off a lot of their economic work from shutdown effects. Tariffs is a big one. Tariff investigations are going to continue in a way that's different than previous shutdowns. So Trump's tariff rollout will be apparently unaffected by the shutdown. More importantly, though, are moves that I think is going to expand Trump's economic powers, potentially using the shutdown as an opportunity. I think it's notable that sort of two moves right off the bat came from the Trump administration to move on funding that they've been wary of for years now. Budget Chief Ross Vought announced a hold on roughly $18 billion in infrastructure money for New York City. That's, of course, the home of Chuck Schumer and Hakeem Jeffries, so that's pretty notable there. And then there's also the canceling of nearly $8 billion in green energy money for blue states. These are projects that the Trump administration hasn't been a fan of for years, and clearly the shutdown is an opportunity to move there. The second area of expansion is in terms of this Trump promise to conduct mass firings or even cut whole departments using the shutdown. We don't have a lot of clarity on exactly how that's going to play out. We've heard some conflicting timelines. Do the firings start in 2 days or in 2 weeks? We still don't know a lot of those details there. But either way, these are both efforts by the Trump administration to kind of use the shutdown to move forward on their priorities. It both puts the political pain on moderate Democrats to flip them to their side and end the shutdown, but it's also, these are things that Trump has been talking about in some cases back to his first term, that he's clearly using this as an opportunity now.
And Ben, we did see a lot of wrangling on Capitol Hill Wednesday and more voting to end a shutdown. Any progress there, Ben?
Not a lot. Definitely, you're right that there was a lot of talking today, a whole lot of television appearances, a lot of press conferences. But I think the overall sense here is we're in a similar place in terms of the chances of a shutdown as we were last night. I think a good indicator of that is votes in the Senate. We had votes last night and we had votes midday today on a Democratic and Republican plan, so 4 votes in total. They all failed to reach the 60-vote threshold, and it's notable that they all failed with exactly the same margins. The Democratic plan went down 47 to 53. The Republican plan went down 55 to 45. The exact same senators voted the exact same way on both days. I think that tells you that it increases the sense here that this could be a longer-term shutdown. There's not going to be a quick out or a quick collapse by Democrats on this front, and I think it's increasing the focus on Monday. We're going to get votes starting not tomorrow, but Friday after the Yom Kippur holiday. But Monday is when all the lawmakers are back in town, and that's when real negotiations might begin. In other words, we're in for this for at least a few days, is the sense at the moment right now.
All right, Ben Werschkul, thank you. So let's bring in now Tobin Marcus, head of U.S. policy and politics at Wolf Research, to discuss what this congressional gridlock will mean in the short and long term. Tobin, great to see you. I'm sure, Tobin, clients are asking you how long you think exactly this is going to go on for. How and when could this end, Tobin? What are you telling those clients?
Yeah, absolutely. Thanks for having me. Duration has certainly been a common question we've been getting from institutional investors as they try and get their head around the outlook here. In terms of timeline, I think we're probably looking at a shutdown of a week or two. I don't think that we're set up for a very, very long shutdown like we had in 2018 to 19, when that shutdown, a partial shutdown, went on for 35 days. I don't think that there's going to be the appetite to hold out that long from Democrats, as I think the ones who are most likely to fold first. But it also doesn't look like something that's going to be resolved in a day or two, as we've had some of these very, very short shutdowns in the past. So in general, I've been saying that the closest analog for this shutdown is 2013. Also a full shutdown, also at the beginning of the fiscal year, another one that the sort of opposition party felt compelled to do to try and make some attempt to stop the president's policy agenda, in that case, defunding Obamacare, even though there was not a lot of expectation of concrete results.
I've heard some folks make the argument, Tobin, they say, when this will end, this is going to end when the pressure really ramps, and specifically when paychecks start getting missed. What do you make of that argument?
Yeah, the mid-month military paycheck cycle on the 15th, since those are semi-monthly, whereas the civilian pay across agencies mostly is biweekly, that's something that a lot of people in Washington have circled as a possible end date. That doesn't really differentially apply pressure. I think that's something that, neither party really wants to see active duty service members go without pay. The administration has already talked about maybe fudging around some lines, using some mandatory appropriations, including the money from the reconciliation bill, the big, beautiful bill, to try and keep those paychecks flowing, minimize that pressure. So that's certainly one possible catalyst, but I think it's a little bit hard to predict exactly what's going to be the breaking point.
And Tobin, have you seen any good polling suggesting who the American public is going to blame for this shutdown?
So the polling heading into the shutdown, perhaps somewhat counterintuitively, has largely suggested that Republicans get the plurality of the blame. As always, the blame is spread around. I think people generally look at dysfunction in Washington and think there's plenty of blame on both sides of the aisle. But I think particularly for a lot of voters who are not paying a ton of attention, the intuition is Republicans are in charge of both Congress and the White House. And so if something's going wrong, it's probably something that's coming from them. I think they've been watching Democrats have no influence whatsoever on policy outcomes all year, whether that's taxes or tariffs or DOGE or anything else. And I don't know that there's a ton of appreciation from voters who are not political hobbyists of the fact that this is one place where there is still a 60 vote threshold in the Senate. And so they do need Democratic votes in the Senate to overcome that filibuster in a way that was not true of the tax bill. The question, I think, is going to be, as people tune in, as this starts to become headline news as opposed to inside the Beltway chatter, do those perceptions of blame shift over time? But at least for now, I think that polling has been encouraging to Democratic leadership in a situation where otherwise, I think most sort of political observers would say they have the weaker hand to play as the party that's asking for something, as the party that's instigating the shutdown in large part. To the extent that they are not being a real lightning rod for blame, I think that's going to make it a little bit easier for them to hold out for longer.
Tobin, a shutdown means that some economic data does get delayed. How, if at all, in your opinion, does that impact the Fed?
Yeah, so I think the payrolls this Friday look very likely to be delayed. It's a bit hard for me to see how we could get the government reopened in time to prevent that from happening. Beyond that, we're looking at CPI and PPI, with CPI coming out on the 15th. So that's possible that we'll be back by then, possible that we won't. That's a closer decision. And in the meantime, the weekly unemployment insurance claims also will be delayed. So, market participants are going to be operating a little bit in the dark. There's a little bit of extra focus on today's ADP data for that reason, because we may not get jobs data this Friday. But by the time the Fed is doing its next meeting on the 28th and 29th, I think in all likelihood, they're going to have that data there. It'd be very unlikely, in my view, that we're still in a shutdown at the end of the month when the Fed needs to make that next policy decision. And so I think the rate path is not really going to be influenced by the potential absence of that data. It's just going to be market participants' ability to kind of look forward, anticipate what that decision is going to be. That's going to be a little bit delayed during this pocket when we don't have good visibility.
What impact, Tobin, as we sit here right now, would you expect this to have on the markets?
Generally, very little. I think everyone's heard at this point, there's been lots of people saying it, that shutdowns tend not to influence the market, and that's been the strong historical regularity. The question in this case has been, is something different this time based on these threats of permanent firing that President Trump and OMB Director Russ Vought have made? Ben was talking about that a moment ago. I don't think those threats are terribly credible. A shutdown is really neither necessary nor sufficient to make that happen. And so I think in an environment where they first floated mass reductions in force back in February and March when DOGE was really at its peak, and I think we have seen the hand touch the hot stove on that a little bit within the administration as they got their cabinet secretaries in there, as there were some more power centers within the administration to push back on Elon Musk. Generally what we saw was agencies have jobs to do. The people who President Trump has charged with running them want to be able to do those jobs. And so they're not really that eager to cut their workforces. And whether we're in a shutdown or not, I don't really think that calculation changes. They're not going to be compelled to do mass firings by the fact of the shutdown. It doesn't enable them to do anything they didn't otherwise want to do. So the view on the Democratic side of the aisle is mostly that that's cheap talk. We'll see if that changes. But, absent those permanent firings, mostly we're just looking at shifts in the timing of economic activity. The amount of sort of economic output that's permanently lost is quite minimal. And for now, we're not really expecting there to be much in the way of permanent effects.
Tobin, great to see you. Great to have you on the show. Thank you.
Always a pleasure.
Coming up, Corteva is growing in new ways. It's separating its seed and pesticide businesses. We'll explain what that means for your portfolio and for the future of that company. Plus, Reddit stock taking a tumble. We'll explain why. And we're watching Netflix as Elon Musk has some strong opinions about some of its programming. Those stories and more coming up when we return. Stick with us. Investors appear to be shaking off the risk for the government shutdown for now. The S&P 500 touching a new record. Joining me now is Keith Gangl, Gradient Investments Senior Portfolio Manager, and Blerina Uruci, T. Rowe Price Chief U.S. Economist. Welcome to you both. Keith, I'll start with you in this government shutdown. And what do you make of this market reaction or the lack of reaction, Keith? There's green all over my screen. I got the S&P rising to a new record here. What do you make of that, Keith?
Yeah, I think the market's ignoring it. I mean, they're looking at the last 22 shutdowns since 1976. On average, they've been averaging 8 days, so relatively short. On top of that, usually when employees go back to work from the government, they get back pay. So if it's short, you get back pay. A little disruption. I think that's what the market's telling you. I think it's going to be short, and there's no employee firing. Again, that's on the table supposedly by Trump recently, but I think the market's telling you that's not going to happen, and it's not going to be a longer shutdown as well.
Keith, when you saw as an investor that it looked likely a government shutdown was on the way and now it's here, just most basically, Keith, did it cause you, did it motivate you in any way to change how and where you were going to put money to work?
No, not at all. I mean, what we're looking at is the overall performance of the overall market's been very strong the last 2 years. This year, the S&P is up 14%. So we're more concerned about what's happening now and kind of the fundamentals. Earnings have been fantastic in Q2. Q3 is right around the corner. I think that's going to be the next big pivot point, deciding if we need to shift our portfolios. But right now, we think we ought to participate. I think the market is grinding higher in the year end, so you don't want to get too defensive. But on the other hand, you don't want to get way over your skis. And a lot of these names have had a big run. You may want to dial us back a little bit.
Blerina, I want to bring you in here as well as the economist on the panel. How are you thinking through this shutdown, Blerina, and possible impacts and ripple effects? Doesn't look like we're going to get that jobs report on Friday, Blerina.
So a couple of things to remember here. I think we need to know how long the shutdown will last. The longer it lasts, the bigger the economic effects. But as we just discussed, it hasn't been a big drag on GDP, because what happens is you'll have these government shutdowns. They drag GDP by 10 basis points to 20 basis points every week the government is shut down. Now, the longer that shutdown lasts, I think those effects can be larger. But what is at play is that oftentimes the furloughed workers are rehired, and some of that money goes back into the economy because they get back pay. What is different this time around is that there is some uncertainty whether the federal government will rehire all the workers that have been furloughed. This could make the negative effect on GDP larger than it has been historically. But when government shutdowns are not associated with a debt ceiling deadline, the effects on markets and on activity tend to be smaller. So that's one part that I think we need to be aware of. The other one is, how does this affect policy making by the Fed, and how does that affect the quality of the data that will be received? So we'll get the delays to the payroll data later this week, and then CPI will probably also be delayed. This will keep the Fed in the dark more than usual ahead of its FOMC meeting at the end of October. But more importantly, while the BLS and BEA are closed, we won't be able to collect the data that go into producing the October report for both payrolls and CPI. So we may actually also get some noise in the data as well because of quality and response rates. So then why does this matter for the Fed? What are the repercussions here? Well, the Fed is trying to determine whether it needs to cut interest rates faster because the labor market is cooling rapidly, or if it needs to hold in place because inflation pressures are accelerating. And we've also been at 3% inflation, a whole percentage point higher than its target for the last year. And so it's tricky for the Fed. I think it makes their job harder. And when they don't make the right policy decision, the macroeconomy as a whole and markets are not going to get the right policy making and the right answer for the economic situation that we have in hand.
Keith, I'm wondering, we are dealing with the government shutdown, but I wonder, Keith, if for the market, what the more important thing is, get your take on this, is that investors are still just watching that great AI trade and trend. And as long as they think that's intact, we're going to keep moving higher.
Yeah, that's definitely part of the story. The AI trend is so big. I mean, it's not only just the technology companies, it's infrastructure plays, it's United Rentals, names like that, your PWRs, thing that contribute to the actual build out of AI. So that is the dynamic that's been driving the U.S. stock market forward. I think that continues, whether the shutdown lasts, a week, 10 days, 30 days, that's going to continue. Again, an ultimate driver of the overall stock market, we believe, is earnings. So we'll see a scorecard here next few weeks. And your other guest pointed out right, the Fed, whatever the Fed does, I mean, investors also care what the Fed's going to do. They're going to be kind of, in the dark here, whether it's the jobs or inflation. So that, the longer it goes on, I think investors, as bullish as they are, become a little less bullish if that keeps on dragging out.
Blerina, I'm just curious, final question to you. Talking there with Keith about the great AI spending boom. I'm just curious, Blerina, how important is that for the broader economy at this point?
I think it's quite important in a couple of ways. First of all, what we're talking about here, the AI boom and the investment that comes with it, we're already seeing that in macroeconomic data. When you look at CapEx investment in the US, structures and residential investment has been quite weak now for a couple of years, but AI related investment, including computers, including intellectual property, that's been pretty strong, and it's contributed about 1 whole percentage point to GDP growth in the first quarter and second quarter of the year. I think that continues because the AI investment is something that it's going to be here and stay with us for some time. So I'm also optimistic about it. And then beyond the CapEx investment cycle, we need to look at the employment cycle and how this affects the fact that we have a shortage of workers when you look at the decline in labor force participation in the US because of the aging population and the decline in migrant flows. And then the question for business is are they going to be able to use AI effectively to increase productivity and then to not need labor inputs as much as they've done in the past, given the demographic challenges that we face?
Blerina, Keith, great to see you both today. Thank you. All right, now time for some of today's trending tickers. Yahoo Finance's Brooke DePalma joins us now for a look at Corteva, Reddit. Maybe we'll talk a little Netflix. Brooke, who knows? We're going to start with Corteva. That company plan is split its seed and pesticide businesses. So the spinoff of the seed segment will be led by, sounds like the current CEO, expect to be completed second half of next year. The intent here, it sounds like, give both businesses, the company saying, the freedom to operate without having to look out for the other. I do see some analysts, though, skeptical of this one, including investors are too.
Yes, investors are certainly skeptical. The stock is down about 10% during today's trading session. But keep in mind, year to date, this is a stock that has been performing somewhat well. I mean, it's up about 7% year to date. And so to dive into what exactly this means, well, the company did have a special call today with its investors. They said that they're targeting capital structures that maintain investment grade credit ratings for both companies. They both are expected to have ample discretionary cash flow to invest in organic growth, the company said, return capital to shareholders, and consider strategic M&A transactions. So just to take a step back, once again, these are going to be two separately listed companies. One's going to be called New Corteva. That's their current crop protection business. They said that makes up about 44% of current net sales. And the other business will be its seed business. And that's going to be called Spinco. Ironically, similar name to what we heard others that have separated their companies from also be called. And that currently represents about 56% of net sales. So really just trying to drive growth. They say that both businesses right now are in a good spot, and they're really looking to capitalize on that and increase shareholder return. Yeah,
I do see analysts at Barclays cited as saying this does not seem to be a clear value creator for the companies. They say we see a potential breakup resulting in the deterioration of both businesses.
Different takes.
There you go. During now to Reddit, let's check out that one. New data showing a drop in OpenAI citations, Brooke, for the platform. So this is Bloomberg intelligence analysts citing a drop in OpenAI citations. The decline shows Reddit's exposure, they're saying, to search engine traffic and any changes to algorithms from large language model companies.
Yeah, this is a company that has certainly taken off year to date, up nearly 24%. And now we're seeing this major pullback, down more than 11% today. And over the past 5 days, the stock is down 14%. And largely what we are hearing here is that, Reddit content is cited in less ChatGPT, the responses, than originally had been intended. They said at the peak back in September, Reddit was cited in more than 14% of of answers. And so really it's this understanding of where exactly Reddit information will be used in that key AI-driven model moving forward, and also what this means as Google, really teams up with OpenAI, as there's other partnerships happening around Reddit, and how exactly they do plan to step into that. We also know that Reddit launched their own AI search and ad tools, advertising, of course, a big business for Reddit, given that within the threads and within the communities, you see key players. Just today, I was looking at one, and I saw Target being promoted on there. And so it'll be interesting to see the way that Reddit can really keep a footprint within this growing AI situation.
Yeah, stock up, as you noted, around 25% this year. It's up more than 200% over the past 12 months, and the street's still broadly bullish on this one.
Very much so, yeah.
All right, lastly, a look at Netflix. That says Elon Musk backs calls to cancel Netflix. Brooke, so we have Elon Musk. He echoed these calls for a boycott, a cancellation, writing same in response to a post on X where a user said they canceled their subscription.
Yeah, this certainly has escalated over the past 24 hours. It's currently now trending on X, formerly known as Twitter. Cancel Netflix has about 215,000 posts right now on the social media platform X. And it's escalated over the past few days. We heard some hubbub on the internet about canceling Netflix over a show that features a transgender main character. That then got the attention of Elon Musk, who then went to his platform X to tweet, I guess you could still say, "This is not okay." He then went on to say that cancel Netflix for the health of your kids. And just recently at 1:48 this afternoon, he went on again to say cancel Netflix. And certainly when Elon Musk tweets, he has more than 226 million followers. And so this has really picked up the attention of not only his followers, but elsewhere, and of investors here. The stock is down at more than 2% now as you make your way into the close. And also it's gotten the attention of someone that I've spoken to before, that's Robbie Starbuck, who was largely behind the DEI initiatives when it comes to Walmart. Also, he's been critical of other brands as well. And so this is picking up momentum right now, but we'll see if it has legs.
We will. All right, thank you, Brooke. Appreciate it. Coming up, Made in the USA may be helping Ethan Allen in the face of tariffs. We're speaking with the furniture company's CEO. When we return, stick with us. The furniture industry is in the policy spotlight. President Trump imposing tariffs that go into effect today, Wednesday, October 1st. It's part of an effort to boost U.S. manufacturing. Few companies have more line of sight on that than Ethan Allen. Its CEO, Farouk Kathwari, has already been producing a significant amount of items here in the U.S., and he joins us now. Farouk, it is great to see you. So, listen, we know, Farouk, the president has been making headlines with these furniture tariffs. You have been working in this industry a long time. You've been at Ethan Allen a long time, Farouk. So I'm curious to get your take. We know what the president wants, Farouk. He wants more stuff made here in the United States. Are tariffs the right way to get it done, Farouk?
Well, first of all, it's good to be with you and on the program. I think the objective is a good one. And as you said, it's a question of how to do it. For instance, when we decided that we would maintain manufacturing in the United States, and it was not easy. We had to then say, United States alone would not be the right for us. We went to North America. I said combining the benefits of overall North America is what would give us an opportunity. So we first, about 22 years back, went to Mexico, the south of Mexico. Then, about 12 or 14 years back, we went to Honduras. By combining what we're doing in Vermont, what we are doing in North Carolina, what we are doing in Mexico and Honduras is what makes it feasible for us. If we had not done it, it would have been very hard for us to maintain manufacturing in the United States. For instance, to give you a perspective, only 20 years back, we had over 20 manufacturing plants in the United States, from New Hampshire to California to Oklahoma to Midwest. And I said, manufacturing was moving to East Asia. I said, no, for us to maintain manufacturing in the United States, we have to rethink. We have to examine what we should do. So we said, we cannot operate 22 manufacturing plants. And I can even tell you some of the reasons. However, we said, what else should we do? So we went 20 years back to central Mexico, purchased, I think, a 50,000 square foot plant making leather upholstery, just cutting fabrics. Well, today it is 650,000 square feet making furniture, exactly the same that we have in North Carolina. We have almost 1 million square foot of operations of upholstery in North Carolina. All the fabric that even North Carolina utilizes is cut and sewn in our operations in Silao, Mexico, and shipped every week, almost three days a week to North Carolina. So combining this benefits of North Carolina is what makes it possible. Alone would have been very hard. Same thing, we went to Honduras about 12 years back, and we said we will have a wood operations there. But then we said we want to have it exactly the same as what we're doing in the United States. To do that, we decided that we would ship them every week our lumber from our lumber operations. We have major lumber operations in Vermont and in North Carolina. So every week, the lumber is dried in our kiln operations, shipped to Honduras. And today, the products that we are making is cherry and oak and pine and all of that. It's made in Vermont, it's made in Honduras. Combining the two is what is giving us an opportunity. So sorry, let me just shut this off. So that is a very, very important perspective. Now, the other factor is the shortage of labor. When you talk about manufacturing in the United States, we have a shortage of labor. So we had to bring in a tremendous amount of technology, tremendous. Combining technology and good people is what made it possible for us to maintain manufacturing in the United States. For instance, our medical costs in the United States is a disaster. We're talking of having manufacturing in the United States, even in the president, I have mentioned it a few times. They should talk about our health costs. We can have easily sometimes a case that's almost $500,000 to $1 million in the United States. No such thing overseas, or no such thing in our operations in Mexico and Honduras. So there are a lot of factors. So I think combining for us, North America has been important for us. Without that, it would be very hard for us to maintain manufacturing. We would have done what others did. We would have gone mostly to East Asia.
Farooq, I'm curious, when you decide to bring more back to North America and bring more back to the U.S., what was the impact on your cost structure? What did it mean for pricing?
Well, keep in mind, it was not the fact of bringing back to North America. We stayed here. Very little went outside. We do have some manufacturing in Indonesia, not our plant, but we didn't go 20 degree overseas. We stayed in United States and then went to North America, like I mentioned, Mexico and Honduras. When we combine those two, that gave us a benefit. Otherwise, we would have had to go overseas like everybody else did.
Farooq, were you able, do you think, to make more here because of your business profile, Farooq? Because maybe you had certain advantages? Was it more efficient and easier to do because you were vertically integrated, Farooq, because you had a strong balance sheet? What do you think?
No, yeah, I think those are very important factors. One of the other important factor was that, again, 20 years back, in our wood products, almost 80% or almost 100% was made in stock. That is, we made the products, kept in inventory. We said no. We should utilize the benefit of our United States, especially United States and North America, and we decided that we will convert all our products into custom. Today, almost 100% of our furniture is made when we receive an order. Now, that gives a tremendous benefit. If the same product was made, say, overseas, the cost would be tremendously high. But because of the fact we are able to make it one at a time, if you come into our design centers, meet our designers, you can select any fabric from 1,000 fabrics. You can take any of our wood products, our chairs, and finishes and colors and sizes, and we make it all in custom, and we are shipping and delivering to our customers in about 4 to 6 weeks nationally. If you try to make custom products, say overseas, and bring it here, forget it. You're talking about months. So it's a combination of factors. If, for instance, we had said we would do manufacturing in the United States the same level as being done in East Asia, we would not be competitive. Combining our customization. The other factor, as you mentioned, is we are a vertically integrated company. We have one enterprise. We have the largest interior design network. And that interior design network gives us an opportunity of working with clients and providing customization of products all over North America. So the other thing we did, is again, a part of it is, about 20 years back, I said, we will create one of the best logistics network of delivering furniture. You can get a lot of products from overseas, and by the time it comes here, all kinds of issues of quality, delivery. So we created one of the best logistics network and did something that was crazy at that time, which is we said we will deliver a product. We call it white glove delivery service, all done nicely at one delivered cost to a customer, whether they are in Seattle, whether they are in Florida, whether they are in Chicago or New York. People thought it was crazy. Today, if you come to a design center, you are able to get our products and it's delivered to your home with great service at the same price all over the country. Now, all of those factors gives us a major competitive advantage. Not easy. It takes a lot of investment, longer term thinking. If you're a short term thinker, you won't do these things.
Farouk, we're going to leave it there, but thank you so much for your time today. Appreciate it.
It's a pleasure.
Automakers seeing a boost to sales in the third quarter, and Yahoo Finance's Praz Sumrining joins me now with a closer look, driving those gains. Maybe we'll start with Ford.
Yeah, look, we expected a big quarter for third quarter because August and July were so strong. September, that continued those gains. So for Ford, sales up 8% to 545,000 units, powering the gains. Of course, not surprised here. Ford trucks, F-Series trucks, Ranger pickups, Maverick pickups doing well here. But also, we knew it was going to happen to EVs, right? So Ford sold around 30,000 EVs, a record high for them, up 30%. The Mach-E Lightning, the Mach-E SUV and the Lightning pickup, record quarters for them. We knew it was going to happen because of that pull forward, the deadline, of course, passing yesterday for the EV tax rate. So we knew it was going to happen. But a lot of SUVs doing well. Explorer, your Bronco,
the Bronco. How'd that do?
Yeah. Quite well, actually. Not the Bronco Sport, Bronco regular, full size, and also Expedition. So, yeah, a lot going on here. The question is, what happens when that, after the EV tax credit, what's going to happen with the EV sales? For Ford, they make a lot of cars in America, so tariffs aren't that big of a deal for them just quite yet.
All right, that's Ford. What about GM?
So GM actually matching Ford in terms of an 8% jump in sales, but a lot more cars, 710,000 cars sold in the quarter in the U.S. GM says they're the number one car seller in the United States, and they actually had their best market share in quite some time this quarter. So they're doing quite well. They also accentuated the fact that they did not use much in terms of incentives to sell, highlighting the fact that their cars are quite popular in America. Again, what happened? It's EVs again, right? More than double Ford, right? Very popular there because they don't sell hybrids, so a lot of EVs sold there. Full-size SUVs, full-size trucks, same, this is America, right? It's going to be full-size trucks, full-size SUVs, but some EV sprinkled in.
Thank you, Praz. Appreciate it. Coming up, Fermi America going public today and has big ambitions of powering AI data centers. We're speaking with the company's CEO. It's an interview you don't want to miss. The IPO wave on Wall Street rolling on here, and one stock hitting the public market today is Fermi America, a real estate investment trust co-founded by former Energy Secretary Rick Perry. Stock soaring in its debut, hopes high for the energy company, even though it's still pre-revenue. I did sit down earlier today with Fermi America CEO Toby Neugebauer, and I first asked him why it was important to go public now.
The biggest reason that we went public is we have a global supply chain, And I think it makes it easier for our critical vendors to know who we are if we're a public company. It's probably the most dilutive from a financial engineering standpoint, but I think the benefits of us being public both in London and in New York will give our customers just a greater feeling and understanding about who we are, and a great way to track our business, because let me be clear, the number one race on the planet right now is for gas generation and the components associated with electron generation, and we want our customers to feel, our vendors to feel good about us.
And Toby, let's dig in a little bit about who you are, sort of the mission, the point and purpose. As I understand it, Toby, just kind of high level, what you are going to do is you're going to build big power plants. These are going to be natural gas plants and nuclear reactors. Do I have that right?
That is correct.
And what's the business model, Toby?
Yeah, it's a critical business model. Our theory is, if you look at America's leading companies that are in the business of generating AI compute, when you look at the growth rates embedded into those models, you're looking at 30, 40, 50% growth rates. And all AI compute are smart electrons, okay? The problem is, on the US grid, they can only expect 0 to 2% growth in the dumb electrons that power that business. So I'm clearly, and the team at Fermi America, we're not smart enough to make the smart electrons, but what we can do for the our AI customers is we can generate those dumb electrons at scale and speed that they cannot get anywhere else. And that's the critical ingredient right now. That's the critical choke point in artificial intelligence.
How big, Toby, do you think your total addressable market is? Can you quantify it for us?
Well, I think, frankly, our customer set is probably 10 of the 15 largest companies in America. Those that are needing AI compute at the greatest scale. And so what they look for us to do is we unshackle their business model from the grid and create for them their own private utility so that they can grow their business at scales and speed that they have not been able to achieve on the grid. So when you think about our total customer group, it's relatively small, but when you think about the collective market cap and cash flows associated with those companies, it's staggering.
There are folks, Toby, obviously others who are just as interested, just as excited as you are about this space. What is going to set you apart from the rivals? What's going to be your competitive advantage?
It's really two things. Number one, a lot of the people currently in the space come from a background of real estate or artificial intelligence. When you look at the Fermi America team, we're energy people. We're going to be really good at generating a lot of dumb electrons. The second thing is our site location. When you look at our site, which is almost 7 central parks, so it's a very large site, it has the key attributes that you need to create electrons at scale. Large supply of natural gas, a large abundant number of pipelines to deliver that natural gas, the water to cool it, the fiber, we have highly redundant fiber at our site. We have permission because our site is owned by Texas Tech, therefore it's owned by the state of Texas, so we have the permits. And then from a nuclear perspective, we sit adjacent to America's most important nuclear site.
Let's dig into the financials a bit, Toby. You aren't yet generating revenue. When would you start receiving revenue from tenants?
Yeah, we expect to receive revenue from tenants to begin construction for our first customer imminently. And our projections for 2026 is our first customer will be online. So we will be generating meaningful revenues in 2026 with, as we've said in our S11, 2027, we're looking at, net operating income in excess of $900 million based on the customers that we currently already have working.
Yeah, I just want to dig into that forecast, Toby. What would be your profitability timeline looking out?
We expect that net operating income to be $900 million in 2027.
2027. Okay.
The way so again, what we're doing is we're not we have the generation sets, which it makes us, we've accumulated over 2.5 gigawatts of power generation equipment, which is roughly half of a Manhattan. So we're going to be able to put that equipment to work profitably because we're going to be one of the largest, most reliable source of electrons for America's biggest companies over the next decade.
Your co-founder here is Rick Perry, Toby, of course, former energy secretary under Trump. What does Rick Perry bring to the table here? What are his advantages for Fermi?
Do you know what? I tease the governor, is that you've been the governor of Texas, you've been the Secretary of Energy, and the global supply chain for electron generation equipment can't be tougher. So I affectionately call the governor our chief procurement officer. I don't view myself as a CEO. I view myself as the number 2 procurement officer. What we've got to do and how we really impact our clients is to be able to deliver electrons at scale and speed fast for them. And right now, the best way for us to do that is to procure. Just like I said when we started this Why Go Public, is we're trying to build a brand that the suppliers of the equipment that generate electrons have great comfort and confidence in who we are and what we're about.
Toby, I got to ask you about this. I read you're going to build 4 large-scale reactors to create what you're calling the Donald J. Trump generating plant. Now, how, Toby, did you land on that name? And has the president, Toby, I'm just curious, has he given you a response, a reaction to that name?
Well, first of all, we have to complete that process with Texas Tech University. So the official announcement of the Donald J. Trump is we're not in a position to officially announce that. We absolutely, the White House, the Secretary of Energy and the Secretary of Interior and the Energy Dominance Council are very, very aware of our 4 proposed reactors. As you know, there are a few SMRs on the table, but these are the first applications for large U.S. reactors in the United States in almost 15 years. So definitely think the president deserves kudos for recognizing the need to restart America's nuclear on a much larger scale than just SMR. We love SMR, but China's got 22 of these reactors under construction tonight.
Toby, great to have you on the show today, and congrats again on the big day.
Thank you. Thank you very much. Appreciate you.
We're wrapping up today's Market Domination. Don't go anywhere. We've got you covered with all the action following the closing bell. Stay tuned for Market Domination Overtime.